Can you take it down, Mike? Hello, everyone. Welcome to the Bull Run Bunker. Let's see if this will go. It's not playing. Oh, no. Anyways, we're not getting the intro, but you saw the screenshot going up. I'm Jordan. Back to our live format today. Still a little rocky. My computer wasn't connecting to my camera. I had to shut the whole thing down. So we're a little bit late get going, but we're going to kind of dive right in here. So today's topic is going to be a continuation of the AI discussion. Oh, just to kind of clarify things, today is Friday, February 20th, and we are live on X, YouTube, and Rumble. It's around 2:30 p.m. Eastern, 12:30 where I am in Central or Mountain Time. It's great to get back to the live formats. I know we were doing the recorded ones for a while, but I got Starlink set up, so I won't be having any of those dropouts like we had previously. So hopefully that kind of makes things smooth out. Today, we're going to continue our dive, as I mentioned, into the outside of the crypto lane and discuss some AI topics, and has massive implications for even cryptos, traditional finance, businesses, workers, all kinds of things. We'll hit some recent developments we haven't covered yet, how AI is reshaping work and business, spotlight some AI-related stocks and tokens, and then go on a community Q&A. That's going to be the main focus here today. I'm not going to show too many pages or charts. Really want to just take any community questions that are out there. First, let's dive into the crypto charts. Let me pull that screen up. Hold on real quick. Actually, we'll go here. So we can see the Bitcoin chart here. Bitcoin's pulled back to about 67,786, 780 bucks. So we're still consolidating after the previous pullback. We can look at the broader market. So yeah, we got some green on the 7-day charts, but that's not necessarily the best thing because they're down so far over the past month or so. So we're getting a little bit of green, but even that, it's nothing to really write home about. We got maybe 4.77% with Doge. But overall, Bitcoin is back above 67,000, consolidating. Ethereum, about 1970, kind of holding firm. We're going to check it on gold real quick. Let's see, we got gold over here. So gold's back above 5,000, 5,072. Still getting a little bit of that safe haven bid because things are really, crazy out there world. Got Trump's tariffs. We got conflicts over in Europe. Lots of things going on, people freaking out. And then the AI thing is really throwing a lot of people for a loop, and we're going to get into that. Yeah, so overall, markets are they're kind of similar to where they were previously. Silver is up again, so it looks like the precious metals are getting a little bit of a safe haven bid. Crypto is not so much, but that's kind of where we're at right now. We're definitely clearly in a crypto winter type setting, and it's also starting to bleed over into some of the other assets as well. But yeah, so hedging is what's going on for a lot of investors. Crypto, not too many people are diving into these sessions. Actually, on our crypto mastermind sessions we did last night, again, for anybody that's not familiar, if you go to ffgrv.com, you can check out sign up for the founders level, and you can get access to lots of different posts and articles and some new things that are coming down the pipe for related to cryptocurrencies, financial things, and stocks and AI and all these types of things. So yeah, go over to ffgrv.com, sign up for the founders level if you want more in-depth information than I'm going to provide here in the show. A lot of things I'm going to just touch on briefly, kind of do a general overview. I'm not going to dig too deeply into any of the specifics about certain stocks or cryptos. And yeah, we'll do that more on crypto masterminds and in the community Q&A session. You can actually ask any questions that you might have. But now on to some AI news. Just kind of picking up where we left last time. There's tons going on. There's key developments that I need to cover. Just recently, I mentioned Claudebot in the past one, or OpenClaw. The creator of OpenClaw, his name is Peter Steinberger. He was actually hired by OpenAI recently to help develop their own agent framework. This signals a big pivot towards autonomous personal agents that act independently, which is kind of what the whole point of OpenClaw was. And the difference between current AI bots that are out there now, you go to Grok, you go to Gemini, you guys type in a question and they answer it. A lot of times they don't save your data into different chats, and if you open up a new chatbot, it completely just starts answering you fresh. But with these new personal assistant AIs, they're downloaded onto your local machine, so they're constant. They remember everything you do. They get into your email, your chats, like chat apps like Signal or Telegram, all these different ones. So there's definitely we're starting to see this switch over, and we have predicted this in the past with some of our remote viewing sessions, just looking at the future of AI and whatnot. We do see AI personal assistants, and everybody's going to have their own blockchain, kind of, if you will. And these two are going to work in conjunction to help you all of us manage our lives, make sure everything is tracked, our data is stored, and we can access it when we want to in the future. So there's a big development. This is really starting to see this form now, especially with the release of OpenClaw, and now them hiring Peter Steinberger to come on to OpenAI to help them integrate that kind of same functionality into their platform. So the agent area chatbots are ending the chatbot era, and we're starting to really get into the agent era. It's ramping up. Another big announcement: the National Institute of Standards and Technology launched the AI Agents Standard Initiative on February 17th, which is designed to build interoperable, secure AI agents. They're seeking input on security, identity, and authorization. This is a huge development for trust and adoption as far as AI agents go. So the fact that they're putting out standards and stuff is really showing that lots of different people, government officials, corporations are looking at AI and really wanting to make sure it's safe for everybody, but also not miss out on the developments that are happening. Minimax, which is a Chinese startup, dropped the M2.5 and M2.5 Lightning models, which are near state-of-the-art performance at 1/20th the cost of top models like Claude, Opus 4.6. MOE architecture is slashing prices. Enterprises could run agents for $10,000 a year with this type of setup. So it's significantly dropping the price point for things like Claude or ChatGPT and everything. So yeah, we saw that previously with DeepSeek. The agent side of things is really cutting the cost on running these AIs. And I imagine over the next few years, we're going to see that trickle over into the ones released by American companies and whatnot. So yeah, the prices are really going to start dropping because what happens is, that's why we kind of covered it previously with the deflation. Getting the startup for the AIs is what really costs a lot. But once they get rolling, the AIs actually start to help code with themselves. So they're contributing to their own development, which helps decrease the costs and improves. It cuts out a lot of the time lag and just the mistakes that humans make when you have the AIs do it too. So overall, we're starting to see the cost really come down. And with this release from the Minimax in China, it's only 1/20th the cost of Claude Opus. So we're probably going to see that even more in the future. So just that's something to take into consideration too when you're thinking about AI investments. Some of these firms that are really making money now are probably going to drop just because of improvements to the technology. So overall, this highlights the ongoing shift from chatbots to AIs as a worker. The Treasury released the AI Lexicon and Financial Services AI Risk Management Framework on February 19th to guide safe AI in finance as part of the president's AI action plan. So even Trump and the government's really pushing to get things up to speed with AI. They're doing it a lot faster than they did with cryptos, obviously, getting the frameworks in place and the security, different frameworks just to help the rollout go a little bit more smoothly and more rapidly. Cryptos have been around since 2009, and we're only now starting to really get movement as far as government interaction. And that has to do because it's a currency. It's not AI is a broad-based improvement on society, whereas cryptocurrency challenges the old established status quo of fiat currencies. Some other buzz that's out there: Anthropic's Claude Opus 4.6 with multi-agent team and 1 million token context was announced. Google is previewing Gemini 3.1 Pro and Lyra 3 music generation, and Snowflake OpenAI has a $200 million partnership for embedded agents. So there's lots of developments, lots of money going around right now just to really ramp up what's going on with AI. So the narrative: we're underbuilt for agent explosion. So before it was, are we spending too much money? Is this a bubble? But now everybody's starting to realize like we're underbuilt. We're not putting enough money into AI because just what it's going to be capable of transforming in society. And I mentioned this in the last show, where before we've completely switched from bubble narrative to, oh crap, we need to do more. And yeah, some people, that I think it was Google, they announced that they were spending so much on AI, but it wasn't enough, and their stock actually went down because people were like, oh, you need to put more. So people are really starting to realize what's going on with AI and getting on board. For crypto watchers, this ties into centralized compute and AI blockchain synergies. So there's lots of ways that blockchain and AI are going to work together in the future, which bodes well for people that have been invested in cryptocurrencies or are starting to get invested now. So picking up where I left off on Tuesday, AI agents are automating knowledge work such as coding, analysis, and ops at scale. Workers need taste, judgment, rapid adaptation. Routine execution depreciates fast, so you're going to have to up your game. If you're working in the field of AI or you're a developer and those types of things, you're going to really have to up your game, learn what's going on with AI to keep pace. Don't just kind of shun it or look the other way, because you're going to get left behind. In the future, companies are going to be looking for people that are willing to jump into the AI ocean and get things settled, instead of just like, if you're at a company meeting right now, instead of just kind of suggesting maybe, oh, maybe we should check out AI for this. If you want to look good, prepare yourself ahead of time. Say, kind of get some bullet points on what AI can actually help the company do before you're even asked by your bosses, types of thing, because that will kind of put a spotlight on you and show that you're kind of forward thinking. And they're looking for people that are taking that initiative, especially if you're tech minded, because a lot of them aren't, the higher ups executives aren't necessarily going to be able to handle or understand all the tech side of things. But if you can really go in there and show them that you're ready to be the lead when it comes to AI, it'll really help boost your own career. That's what I'm seeing out there. It could be able to be different for every company, but in general, companies face integration hurdles, legacy code drag, and model shifts from per seat SaaS, which is software as a service, to agentic value-based pricing. So the whole model is going to shift. I mentioned this last time again. All these softwares as services, whether it's like Adobe and Adobe Acrobat, all these ones where you got to like pay for a license for it on your machine, those are their whole revenue model is being upended by AI, because people just ask AI certain questions and it'll get the output that kind of replaces what those SaaS companies were doing. So that's kind of one of the biggest changes driving agents behind the change. Expanding on that, agents are now coordinating multi-agent teams, running long tasks securely, and monetizing proprietary data. Hyperscalers 600 billion plus 2026 capex is 75% AI. It flips the bubble narratives into underbuilding, as I mentioned before. OpenAI's Frontier helps develop agents in enterprise infrastructure. The National Institute of Standards and what was it? What did I say it was? I forgot the NIST. I'm just going to call it NIST. Those standards that were just announced, they boost confidence. So more people are going to get involved because these standards are in place. They're seeing that it's a little bit more secure, and that's exciting people. Now let's talk about how Wall Street's reaction, because this is a big thing. Like, Wall Street is way overreacting. I'll leave that to you to decide. But recent AI developments are sparking some scared trade patterns, and this is where it comes into like investors and what you need to be mindful of. Panic sell-offs across sectors like software, private credit, insurance, wealth management, real estate, and logistics. And this is wiping out billions in market cap for lots of different companies. And sometimes it's just a small announcement from a random firm, that a company that was only worth like $6 million made an announcement, and it caused this huge giant, I think it was a shipping company, their stock went down like 8% because of what this company announced. And it's not even like necessarily going to have an immediate impact, but this is just the Wall Street's reacting. Everything that comes out now, AI, people are overreacting. Companies are like, well, we got to gut our whole tech department because one AI and one worker is going to cover it all. So there's also like a lot of stupid mistakes or decisions being made right now. That's because people don't necessarily know what's going on. AI is new, and they're trying to get ahead of the curve, but a lot of times it's actually going to mess them up in the long term. In just 10 days, 8 industries tanked on AI announcements, such as a $285 billion evaporation in the SaaS field, legal tech, and data analytics, after Anthropic's plugins CH Robinson Worldwide plunged. After Anthropic released their plugins, CH Robinson Worldwide plunged 24% on a small AI freight claim. That's what I was talking about. This small firm that's worth about $6 million made an announcement about how their agents are helping improve workflows. And this CH Robinson Worldwide, its stock plunged 24%. Now, this is an established company with relationships established around the world for shipping and freight train or freight. And you can't just replace that overnight. But for some reason, people thought that because this small company released an announcement about agents, CH Robinson Worldwide was in a threat now, and their stock tanked. Again, just the relationships and shutting up the logistics about shipping, all that is like large proprietary information with this company. But just because of this one agent, they're like, that stock turned 24%. And it's obviously going to rebound. It's not really feasible, that shouldn't have happened, and people are overreacting. So this whole Wall Street thing, the AI is really throwing Wall Street for a tizzy. So that's something to be mindful of. And if you see some of these opportunities, you see like a CH Robinson Worldwide fall 24% when they still got good outlook and nothing's really changed for their business model. That's a good opportunity maybe to sweep in and purchase that stock at a discount, and it's going to rise back up again. It's not investment advice. None of this is investment advice. This is just kind of me sharing information about AI, cryptos, stocks, and just ways of what investors should maybe be thinking about moving forward. Private equity firms like KKR, TPG, Apollo, and Blackstone dropped 8 to 10% with some of these announcements. Wealth managers like Raymond James is down 8.8%, while Schwab is down 7.4%. And this is because they're releasing things about AI financial management and technology and whatnot. So people are like, oh, you're not going to need Schwab anymore because AI is going to do it now for you. Again, really fast overreactions from a lot of people, and it's going to bounce back. And we see this a lot of times when new tech come out. So it's just something to stay aware of as an investor. Real estate like CBRE is down 12%, and Cushman and Wakefield is down 14%. When it comes to sentiment, the immediate action is to shoot first and ask questions later. So people are just like, something comes out and it was like, shoot, was that a smart thing to do? I don't know if that was smart to do. Should we have done that like after the fact? So yeah, that's just kind of the phase we're in right now. It'll probably quiet down a little bit when people get a little bit more understanding what's going on. But it's kind of akin to an autoimmune disorder where like things are coming in and Wall Street's attacking it, even though it might be beneficial for them in the long term. And it's causing a lot of disruption. The problem is that they're treating all AI exposure and all AI announcements the same when they're not, especially when it comes to different types of fields. Goldman CEO specifically called it too broad. JP Morgan sees rebounds in software due to overly bearish outlooks. So like what we've seen now is going to bounce back eventually, and there will be longer term ramifications for some of these developments. But in the short term, they're just kind of thought ideas, or they're just rolling out these AIs. So the real impact is not going to be for a while. But and just on the employee side, this rapid reflexivity causes real changes with its hiring freezes, roadmap pivots, cost cutting. It turns fear into self-fulfilling prophecies, which is like, again, people are just overreacting to the news. They're not sure what to make of it. They make rash decisions. Let's cut half of our developer team. And that's going to have long-term effects on some of those companies. So if you're looking to invest in any of these companies, look at what they're doing, what kind of decisions they're making, especially in regards to AI and how they're cutting costs or cutting workforce to assuming that AI is going to come in and fix those problems. So yeah, just kind of be aware of that. Experts categorize risk just to help you be a little bit more informed. The AI risks, there's category 1, which is like immediate and software development. Category 2, which is 3 to 5 years out, like wealth management. Category 3 is overhyped, like logistics, where relationships trump tech. That goes to the shipping one I mentioned. Like the relationships that company has around the world is a lot more important than the AI tech that this small firm released, but people are overreacting. And what should have been like a long-term reaction turned into like a week-long reaction, and we'll see bounce back from that. But yeah, the key thing here for investors is these overreactions create generational buying opportunities in mispriced stocks, but compressed valuations for non-AI firms such as S&P Software Index is down 20% year to date, while AI native valuations soar, with OpenAI has a potential $1 trillion IPO valuation. So we're seeing this split happen in the market, and it's something to be aware of, and try to find the good places to place your money for some of these asymmetrical bets that are emerging in the AI sector. For careers, asymmetric upside for domain translators, bridging AI and expertise, and genuine fluency. Again, if you're a really good expert matter in your field, you can work with AI to help refine like AI responses, the outputs that AI are giving, to make sure that they're not giving you false information and whatnot. And this cuts down, like AI is helping cut down contract reviews 40%. But yeah, you want to make yourself indispensable in the age of AI. So you got to learn about how to use AI, how to integrate it, what types of capabilities it has. Oop, I just turned it, didn't I? Panic accelerates adoption. So remember that, like, because this panic is happening, because Wall Street is overreacting, it's actually speeding up the adoption of AI. It's causing more money to be put into the ecosystem to build out. So it's good and it's bad. It's bad for people that are invested in other firms that are really getting hit by it. It's good for just the whole AI field in general and the benefits that are going to come from it. But yeah, this acceleration it's creating new roles. It's increasing budgets, but delusional timelines lead to collateral damage like headcount cuts from sentiment, not fundamentals. So again, this is the human aspect of it, the psychology side. People are freaking out. It's a new technology. Every time a new technology comes around, we have similar developments. So yeah, look for those opportunities where a legitimate company maybe got hit hard by an AI announcement, but nothing's really changed for their bottom line, especially not in the near term. That might offer an opportunity to, like that stock that fell 12, 20, 24%. It could rebound up the same amount within a few months of what it lost. So there's potential opportunities there abound. Some stocks to look at here. I just got some Planter, PLTR. It's bucked the trend with 8% after-hour jump on earnings beat and AI migration claims. Strong play for the AI and enterprise data era. Broadcom, which is AVGO, it's a key networking for AI data centers. Analysts see strong momentum from the infrastructure boom. You got Taiwan Semiconductor, it's TSM. It's a fab giant for AI chips such as NVIDIA and AMD. Supply constraints favor it long term. Got Micron MU, it's a memory leader for AI training inference. Massive demand and there's strong buy ratings, so that's the one to look at. As far as crypto tokens, you got BitTensor, which I covered previously. It's a decentralized network which models compute and you can earn rewards using it. It's AI's native currency vibe. You got the Artificial Superintelligence Alliance, which used to be Ocean Protocol, Fetch AI, and AGIX, which is Singularity Net. They combined to form the Artificial Superintelligence Alliance. They use the ticker for Fetch, which is FET. And this includes autonomous agents for IT and mobility and energy, and a marketplace for AI services. Agents and tools on blockchain, undervalued for the agent era. Again, we're going to see a lot of this agents combined with blockchain. It's not necessary to combine agents with blockchain, but blockchain offers a way for immutability, storing data, and greater security in some respects. Another project to look at is Render and RNDR. No, it's Render, not RENDER. Decentralized GPU for AI workloads. There's a real utility in the compute marketplace. And all these together kind of bridge the AI compute hunger with blockchain. So you can watch for adoption spikes amid Wall Street overreactions. So let me, I think that's kind of basics on just some of the overview of what's going on with AI and stuff. Let me see what kind of questions we might have gotten here. Go on to the Q&A session before we wrap it up. We're already at 22 minutes. We're going to try and keep some of these shorter. People don't necessarily want to listen to hour-long videos anymore. So, let me see. Studio chat. Boop, boop, boop. Hello. Good afternoon. DGB Reserve in Arizona. Oh, they got a Digibyte Reserve in Arizona? That's interesting. I was just looking at Digibyte the other day. Where's Digibyte? Let's look at the Digibyte chart, just because somebody mentioned it. Unless it was something else. I'm going to assume that you're talking about Digibyte, the cryptocurrency, because, oh man, I don't like looking at the charts right now. Everything is so bad, especially altcoins. It's been rough for altcoins, right? Ooh, Digibyte. This one only goes back to 2022. Let me see if I can find a different chart. That one's even shorter. Oh, that one should work. Yeah. Oh, let me share my screen. Here's a chart for Digibyte. I remember back in the day, Digibyte got a lot of press back here. 2017, there was a psychic that was like, Digibyte's going to $1. So it got pumped up and then it fell back down to 0.002. And now, and it had a decent rally in 2021, back up to 18 cents. Never quite got close to $1, but it has waved. This is the weekly chart. So you see the 1, 2, 3, 4, 5 correction, A, B, C, or the five wave correction. So we're basically back at the bottom. The good thing is that we're not at the low point. Let's see, here's a ray. The lows you see right here, we never got back down to that line, so that's positive. So I would say anywhere between here, and that's kind of the main support. We'll see right there. Yeah. So yeah, we're just below that old support line that was back here in 2019, and stayed above that for most of the last session. But this whole market has been just hit hard by what's been going on recently. And I look at so many altcoin charts now, and they're all starting to really dip down below this buy line that I've identified on different charts. Is Digibyte going to be a long-term survivor? That's the question. Some of the things it's got going for itself is that it's a old coin, legacy coin. It's still proof of work, which some people really like. I think it's merge mine now with, is it Litecoin? No, Dogecoin is merge mine with Litecoin. The Digibyte is another mineable token. They're trying to work with some AI integrations and stuff like that. Will it be good long term? We'll see. I don't know what to say about a lot of these things right now. A lot of the tokens that have been around, especially in the last couple of years, they're going to just disappear, especially with the AI agent or AI era unfolding. Some of these legacy tokens will probably do all right long term, just because there's some of that. What's the word I'm looking for? nostalgia. Some people like them. Again, the proof of work thing, that's a meme in itself. That's why Dogecoin is the top meme coin, because it's a proof of work coin. I don't think that it'll stay kind of in its top spot in the meme coin sector for a long time to come because of that. And Musk is always pimping it. Yeah, I do hold a little bit of Digibyte, but I'm not necessarily throwing more money at it right now. So that's just what I think about Digibyte. Let's see. AI is great, but not trustworthy. So you need to build something that doesn't hallucinate, says Breath within yoga. Yeah, that's true. Like the AI does hallucinate now, but so do people. People make up stupid things all the time, or they say incorrect facts. A lot of it has to do. Is my camera not working? I can't see. Or I'm in a little circle down here. Anyways, there we go. Thank you, Mike. Mike's my producer. Thank you, Mike. Shout out to Mike. Yeah, AI does hallucinate now, which is not good, especially if you are trying to rely on it for important information. But the same thing goes for people. People hallucinate too because they hear the wrong things on a certain news, or just somebody says something wrong. So that they're going to work that out over time. And I assume there might always be a hallucination issue with AI. So that remains to be seen. But are you trying to say it's less trustworthy than people because people hallucinate and lie as well? I hate chat prompts. It displays the weakness in AI right now. Legit, having to continually re-promote AI to keep accuracy is a huge weakness to its user case. That is true. And that's part of what I'm talking about with the new forms of agents that are going to be localized on your computer. A lot of it, you have to keep re-prompting them because they don't remember it, or they're just, there's so much going on. They might be pulling from different conversations you've had, so it can be confusing. The new age AI that are coming out, again, they're going to be downloaded onto your specific device. It'll have access. Well, it accesses what you give it access to, but it can access anything in there, and it will remember. These things are awesome. They do things like they don't wait for you to prompt them. You say, "I need you to improve my workflow," or you just plug it in, and it goes to work. It goes through your emails. It might respond to the emails. It goes through your chats. All these different things, and it starts doing things. There's a lot of good memes on X showing like, "Oh man, Quadbot did open a company, got value, or got a funding." All these different things, all in like a few hours. They're really funny. I encourage you to go look for them. But they're really capable, but it's also dangerous because they have access to your information. I mentioned last time, LLMs are really good at reading information but not distinguishing it. So you could get an email from a scammer that could have instructions for the AI to give them access to your information, and it'll just kind of go through it and follow it because that's what it's designed to do. So they got some security issues to work on it, but in the future, we're all going to have our own personal AI agent in the not too distant future, and we're all going to be like, man, what did I do before this? Because this thing is awesome. Right now, it wouldn't. So, right now, it wouldn't surprise Blaine if AI hallucinations cause massive stock market losses in the future, especially from a hallucination. That's true. Oh, that's what I was going to do. Let me see if I can find that. Where's that email at? There's a good scenario that we ran as far as what happens in the future when everybody's got an AI bot. I meant to get this done before, but ran into technical difficulties and it kind of distracted me. Let me see. You search. The future of wealth in general. Let me actually put this over here. I'm just going to read it to you. It's pretty long, but if everyone had identical access to the absolute best AI trading tools, such as perfect information processing, instant execution, no latency differences, same model data feeds and whatnot, investing as we know it would fundamentally change. Markets would approach a hyper-efficient state, close to the strong form efficient market hypothesis, but with new risks and shifts in where real-time alerts come from. Here's what would happen if, based on economic theory, current AI trading research, and expert discussions, alpha, consistent outperformance would largely disappear because everybody's going to be using the same information, and the AI is act like instantly. Passive investing would win completely. Index funds and ETFs become the only rational choice for 99% of the people. Everyone would essentially get the market return or beta. The industry would shift from the best beat the market to help you allocate across assets, manage taxes, and match your personal goals. Markets would normally be extremely efficient and liquid, but become much more dangerous during stress, which you kind of hinted at with that question. When everybody's AI uses the same models and reacts identically to the same triggers, it's like herding on steroids. Flash crashes, cascading sell-offs, and violent swings would become more common. See IMF warnings on AI-driven trading in the 2010 flash crash. And shared AI blind spots, such as all models overweight the same data or miss the same talk. Tail risk would create systemic fragility. Trading volumes would explode, but real economic value might not. And I'm just kind of reading bullet points. I'm going to post this actually on FFG as a full article, so you can read it through it more. I don't want to take too much time right now, but where would actual wealth creation edge move? Private markets, entrepreneurship and innovation, alternative data and proprietary edges, and personal factors like risk tolerance, time horizon. The bottom line, investing would become normalized in the truest sense. It would turn into savings with market exposure rather than a competitive sport where skilled players win big. The average person would do better, cheaper, more efficient access to returns, but the dream of beating the market would largely die for retail and most professionals. True outperformance would shift from financial markets to the real economy, starting businesses, inventing things, taking more tradable risks. We're already moving in this direction with passive AUM dominance, AI tools, and democratizing analysis. A world of universal perfect AI would just accelerate it to its logical extremes. It would be a more efficient, fair, but also more fragile system, and one where the real money is made outside the stock tickers entirely. So just kind of returning to your point, yeah, if there's mass hallucinations, it would definitely cause problems for a lot of things. And that's going to happen the more AI agents get out there, the more they're out there trading. But eventually everybody's going to have an AI agent trading for them. And this post is basically saying that that would normalize the whole market. A lot of the massive upside or downside would probably disappear, but everybody kind of democratize access to it. So yeah, there is also always that risk of hallucinations causing a massive stock market loss. But we've already seen that with Wall Street without these AI bots. They're freaking out because of announcements related to AI, and we're seeing massive sell-offs on some stocks. So it's not just AI bots. There's also human psychology that play into factor. Awesome info. Appreciate your perspective. Did FFG look at Dr. John C's prophecy on solid state entity? Man, what a wild world we're in. I'm not familiar with that. I can look into that and maybe address it next time. But yeah, we are in a wild world. And when I think about Cliff High and Michael, he always highlights, we're in hyper novelty. That's what's going on. Like AI is really accelerating hyper novelty because new things are coming out faster than people can even keep up with them. And like by the time you're starting to read about something, there's already 5 new things that have developed. So hyper novelty is really it's ramping up. And like I would just encourage people to really be mindful of that and kind of just focus on keeping yourself kind of level-headed and calmer, because it's only going to ramp up from here. People are going to lose their shit. And if you're not, like, we're going to need leaders and people with the calmer heads moving forward, just so we can not collapse as a society, right? Let's see. I feel for some wailing warfare. I'd feel better depending on a hard-coded system dealing with money and accountability. Yeah, and that's the way it's always been, right? Again, hyper novelty. We're moving into a world where there's going to be new technologies and things accessible to people that had never been. And a lot of older people, and you can throw myself into that group if you're comparing me to like a teenager, but we like the way, like that's like what I'm trying to say is the reason that like physical cash isn't necessarily going to just disappear right now is because people for the past 3 generations have had physical cash in their lives, and they're not necessarily just going to give it up. Maybe this latest generation who are used to using phones don't really care about physical cash because they can't spend it easily, especially they're buying online services, playing video games. You can't just like hand a dollar to your computer and say, upgrade me on Minecraft or something like that. So the younger generations are being prepared for not having physical cash, whereas the older generations grew up with it. So they're not going to let it go. Just like the older generations have grown up with things hard-coded, and especially when it comes to finances and things that really matter, they're not going to necessarily trust these new things, especially when you hear stories about AIs like deleting entire databases and stuff like that. But those kinks will be worked out over time, and eventually you will be more open to them, especially if you're open to growing and changing, which is, I encourage everybody to kind of contemplate and be open to changing, especially with hyper novelty happening. Because, like, for me, since I'm 20, I've worked on extending my own life. And one of the things that I've come to realize with that is you have to continue to change with society, with the world. Otherwise, you kind of get pushed out. So as things change, you want to keep pace with those changes. You want to integrate them. You want to investigate and study them and apply them to your own life. And that will help you stay younger and stay up to date with what's happening out there. But yeah, we need to have people, there are things that are accountable. AI is not necessarily accountable now. AI companies that make an AI aren't necessarily accountable for some of the things that are coming out because of AI. But we are still in the early stages of this, and I imagine over the next decade or so, those things are really starting to flatten out. Those are the only questions we got in from the chat. I think there was a couple on FFG. Let me go to the website. Yeah, hyper novelty is really kicking in. And there's going to be a lot of trust that we're all going to have to build moving forward because things are going to be so different than they used to be. The founders level, somebody was asking on the website, is this for founders level? No, currently, these live streams are going out to everybody. In the future, it will probably be something like I'll talk for most of it, maybe go behind the paywall for founders to give like specific looks at different tokens or different stocks, maybe do a little bit of analysis on them and just go more into depth on certain things for the founders. But one of the goals with these live streams is to kind of put our message out there more broadly, get more people involved with Future Forecasting Group. When it comes to taking profit in cryptos, do you prefer selling in percentages of your holdings or doing full exits at once? How do you usually break up your profits when it's time to sell? Okay, again, none of this is investment advice, but for me personally, I try not to sell all at once. Just the same way as you dollar cost in, or I've talked about that before, dollar cost averaging kind of works in the same in reverse. Just because you might not hit the top, or there's been plenty of times where I had a token run really nice. I'm like, dang, that's a really good upside. Sell it, only to have it double again within the next few days to weeks. Which, if you sell it all at that first run up, you can't take advantage of. No, it doesn't always work that way. Sometimes the price goes down and just kind of goes lower from where you sold it. But that's the game you're playing. And so that's why it's always kind of a personal decision. Either you sell it all, you kind of sell them in tranches. But the key part, and that's why we talk about in crypto masterminds, again, ffgrv.com, we do a crypto masterminds every Thursday, every week. We talk with me, Michael, Dick, who's a remote viewer, and one of our partners at Uptrade, which is a brokerage firm in Australia. And we dive deep into different topics, but we also give price points, like predicted price points where it might go. And one of the things you want to do is that's why even before you buy a token, look at the chart, determine some of these price points. And then if you buy it, you want to go to the exchange. And you can't really do it too much on a lot of exchanges, but with the broker, that's what makes brokers really good. Even if it's like 3 or 4 years in advance, you buy this token, you say, I want it to sell it here. So put the sell order at a certain level, and you just set it and forget it. You walk away, go about your life. In a few years, the crypto market's running, and one middle of the night, you'll get a call or a message from your broker saying, hey, your order filled. So that's one of the really important parts of mastering human psychology and maximizing your upside in investing is pick your take profits. Make sure you set them at least a certain percentage, a large percentage of what you're holdings at these take profit levels, and then you can kind of do what you want with the other parts. But that helps guarantee you lock in some of those profits. You don't have to worry about being on the exchange and monitoring the market 24/7 when they might run. So that's just one of the main points that we highlight. You want to set your take profit levels, put those orders in, and then just leave it. You can kind of monitor the market. You're not always guaranteed to get to those levels, but if you kind of see that the market's turned south again, you can maybe go in and change that. It's really up to you. Question again from Turbo. Also, if we enter a bull run and I decide to hold instead of selling, what's a typical wait time for the next major opportunity? Are we talking a few years between cycles? Thanks. Yes. 4-year cycle currently in Bitcoin. So people are saying that the top might have been in October of last year. Historically, we go at least 13 months to the bottom, and then we trade sideways. So the 4-year cycle, man, let me pull up a Bitcoin chart actually. This is going long. I gotta cut it short. Talking too much. Mike's like, yeah, Jordan, you're talking too much. Yeah. Let's see. I don't know if you can see that screen to me. Shoot. Is it sharing? It doesn't look like it's sharing. There it goes. So you see the Bitcoin chart. This cycle, here's like one cycle. There's several cycles down here. The cycle kind of starts 27. What was it having? It was 2016, 2020, 24. Yeah, 2016 was a halving. Cycle up, comes down, and that's 2018. Trade sideways. Really, this is all kind of the crypto winter. This is like crypto spring. It started to go up, but as you can see, it still fell down here to the $4,000 level in 2020. So between the top in 2017, it wasn't until 2020 the market really bottomed and then started the next leg up. So that's one cycle, 2016 to 2020, 2020 to 2024. It was a little earlier this time because of the hype around the Bitcoin ETFs, which released on early January 2024. So it was really starting to build here. But a lot of times, like this period is kind of similar to this one. This has a little bit more upward trajectory. So the cycles are about 4 years. If you decide not to sell when these peaks hit, you might have to wait from this peak to this peak. What? November 2021 to September 2025. So 4 years. So yeah, just a kind of quick answer to your question. If you wait, you might have to wait for 4 years. Shantir, what will be the effect of the Epstein files on the government in light of the arrest of one of the royals? That's something we're all looking and waiting to see, right? It's funny that Trump's like, we're going to talk about UFOs with all this Epstein stuff coming out. Like the next day, Trump's like, we're going to talk about UFOs. Here's all our UFO information. They're really trying to distract from that. So that's one thing. Maybe that's one of the big effects. We're going to get disclosure. That would be cool. And a lot of people in this community, especially Daz, who's like one of our main remote viewers, he's been on the UFO kick for like decades. So, man, people are into the Epstein thing. Well, was Epstein a double or triple agent blackmailing powerful individuals? I don't know Epstein. I wasn't really personally involved with him. Everything I know currently is just kind of hypothetical, but it does seem like he was an agent for somebody and blackmailing people on all sides of the spectrum. So who knows which side he was working for? Maybe he's just a power hungry individual trying to maximize his own gain. Does seem like he might have been working for some select governments. I'm not going to mention who, but yeah, that's just my opinion on the matter. I don't know if we're ever going to really know the truth behind Epstein, just because there's already been a lot that's going on from his death to the arrest to Ghislaine Maxwell. Nobody's ever been charged for it, but she was charged for selling people to some of these people, but none of these other people have ever been charged. So is there really a crime if there's no actual victims, or no, there are victims, but there's no perpetrators? The whole thing is just really suspect to me. And the fact that both sides of the aisle, Democrats and Republicans, are kind of ignoring it, or have had their selective times of ignoring it or paying attention, depending on whether or not benefited them politically. It's suspect to me. The whole thing is suspect to me. I think they're all trying to hide things because there's there's names on all sides of the spectrum on that list, and it really kind of hurt just about everything if that really unfolds or those all get out. Like if all these people have to get kicked out of the government, these types of things, yeah, that would be devastating for the world order, right? I mean, a lot of us are like, do it. Yeah, we need a new reframe for the world order, refresh. But it's not really going to happen, like the short term. So those are just my opinions on it. And with that, that's the last question we got. So I'm going to kind of wrap it up here. Let's see. Wrapping up, just kind of recap what I've said. The AI agent shift is accelerating. New models, standards, hires, and infrabets signal 2026 as a significant pivot time. Wall Street's scare trades show overreactions, but they're driving real change for workers and companies. Stocks and tokens like Palantir, Broadcom, TSM, Micron, BitTensor, Crypto, FET, Virtuals, and other offer exposure to the AI movement and moving forward. So yes, check those things out. Again, this is going to be a field that really ramps up. I encourage you as individuals to really explore AI and get used to using it as well. It'll make you instrumental for not only your company you're working at, but if there's ideas that you have out there that you've been kind of mulling on for years, but you've never really been able to put them in motion, I encourage you to go find an AI chatbot or something and see how it can help you. I want to write a book. Can you help me get this process started? I want to design a company. I want whatever it is. Get out there and start using it, because AI is not going away. It's going to be integrated into our lives. We will eventually have AI personal assistants. So you want to be familiar with these things and just get ahead of the crowd on these. Again, most of society probably won't do that, won't really dig too deep in it. If you want to set yourself up, whether it's as in working for a company or in your personal lives, figuring out how to make it work for you with investment, all these types of things, you're going to have to take that initiative and do it now. but it will pay out for you in the long run. All right. So that's going to wrap it up for today. I'm Jordan. If you want, you go to ffgrv.com, sign up for Founders. If you want more financial information, dig deeper into some of these topics. If you're just interested in remote viewing, you can check out, sign up for the Explorers tier. And with that, I want you to say just again with AI, stay curious and bunker on. I'll see you next time.